Okay, talking about CNQ today, Canadian Natural Resources. CNQ is the ticker on Toronto Stock Exchange. I think it does trade in New York as well. I'm not sure what the ticker is there. Okay, context is important and the timing is important. So it is Tuesday, March the 10th, 2020 at 3 o'clock. And there's a ton of opportunities out here because of this coronavirus outbreak, and has just decimated the market. And there's going to be some opportunities, but there's also some other ones that we have to say, you know what, this is affected in a big way. The circumstances have changed, and it's time to move on, despite it being way down. And I think CNQ and a lot of the Canadian oil sands are in that category. And it's not just coronavirus in this case. So that is slowing down, demand worldwide, economic activity. That is true, and that hurts oil. But it got worse on the weekend as well, when Saudi Arabia and Russia got into a price war and just decided they're going to flood the market. I think Saudi started it, and then Russia said, we don't care, we're going to do it too. And so the world supply of oil just kind of is expected to rise, therefore prices go down. And unfortunately in Canada, we get it a little worse. We don't really get the world price for oil for a variety of reasons. One thing, tar sands are a little bit dirtier, so we don't get the premium price. Also transportation, we're kind of in the middle or landlocked. It would be better to be along the ocean, and it's just the way it is. So the economics in Canada are tough. They're really tough. So a lot of companies are gonna be in tough. So let's look at the world price of oil. I got a lot of screens open here, so bear with me 1 second. I can do this relatively quickly, I believe. Okay, ready to go. Oops, not quite. I try and do this all in real time here. Okay, so this is a great website, oilprice.com, and it's got all the different prices for oil. So WTI is Western Texas. That one's a pretty good one for the US to use as a good proxy. And then Brent sweet crude is kind of the world standard. Okay, and that's trading at about 36.94. Yesterday it was down a massive amount. It's bounced back. Looks like 7.89% today. Okay, so, but overall it's down. And in fact, the amount it was down was the most it's been down since 1991 during the Iraq War. So that's pretty crazy. Let's look at the max chart over here to the right. Just updating it there. Now, when they say max, they're only going back to 2015. But you can see, it maybe peaked at 80, was about the highest. We're down to, less than half of that. We're down to under 40. But fundamentally, I don't know if there's a good reason to believe that it's going to go back up. As we said, the market's being flooded by Saudi Arabia, and Russia's right behind them, and it's bad news. Okay, so Canadian crude. So 36, actually just bumped up to 37 as we're speaking here. But Canadian crude is at $19.95. Okay, that's all we get for it. And then we got transportation and all these other issues we got to go by. And then there's also Western Select. So Western Select, for some reason, it was down 39%. This is yesterday. I don't know why it's not updating in this website. That was yesterday. I'm sure it's a little bit higher today. But it illustrates a point. It's 1573 was Western Texas. Okay? Western Texas. Western Canadian Select. Get this right, Kaser. Okay. So you can see overall the prices in Canada are just going to be lower no matter what. The overall world price is low. And then we get bumped down even further. That's bad news, obviously. Let's look at CNQ directly. How's it been doing? Well, you see a long decline here over 20 years of return on capital bottoming out in looks like 2016 at minus 3%. And it's crept back up to a massive 2%. Wow, 2%. Very low. Okay. Now the model, I just left the default on and show you how we think about things. The model kind of gives it a rebound to about 5%, and that actually is worth more than what the stock's trading at. Stock's gotten hammered. I've got, for 1 month, it's down 44%. It got hammered yesterday. I think it's down just a little bit more today. So some people would just automatically go, oh, it's an opportunity, right? Well, I mean, fundamentally, look at the industry. Look at the long decline. This is a 20-year chart here, and it's pretty much declined almost straight down, like, you know, a little bit of a staircase, but and now we got a little bit of a 2% return. I don't think that holds. Not in this environment. I think that goes lower. So we've got a rebound in the default kind of algorithm. Let's just say it stays at 2 for the next 5 years, which is a very plausible scenario. And we already get, you know, fair value. But again, that after year 5, it rebounds again in the default model. It's hard to see there, but that's what that's showing. This could stay low for a long time. So, you know, I'll just tweak some of these variables about keeping it lower for a long time. Let's just say even 4% in the long run instead of bouncing back to 6. And okay, the valuation actually disappears, meaning that it's overwhelmed by the debt. It's not even worth the debt if this is the correct scenario. So, listen, it's down a ton, and perhaps you could see that as an opportunity, and I can see why some people would say that, but the fundamentals of the industry and of the company specifically are just not good. So worldwide industry is terrible. Canada industry is worse. The company itself, actually CNQ relative to other Canadian ones, is actually pretty good. But and why am I bringing this one up then? It's because this one's actually in our models now, and we're looking for an exit. Okay, so this is one I want to move on from. It's in our models. I'm gonna hope that we get a bounce and get out of it, but at some point I might just have to fish and cut bait, even if I don't get it higher than this. I just don't think it's an opportunity. So it's the way it is. Sometimes you just got to move on. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or a retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.